The world's second largest economy stocks are uninvestable again. Bernstein Sales Trading Desk's Mark Shilsky said in a note that this idea of Chinese stocks being uninvestable has been a recurring theme in the media over the past few weeks, following the 20th National Congress of the CCP. The meeting, which was supposed to give investors clarity and optimism moving forward, seems to have done the exact opposite with the Golden Dragon Index and the index featuring 65 U.S.-listed Chinese businesses, plunging 14.5% after the event. Anyway, it's certainly no secret that following the National Congress, some of these big-name Chinese stocks were absolutely crunched. Names such as Alibaba, Tencent, JD.com, and Pinduoduo fell between 10 and 25% in a single day, after it was revealed that there would be a major leadership reshuffle set to further consolidate Xi Jinping's power. It also didn't help that the event was shrouded in controversy, as video emerged of former Supreme Leader Hu Jintao being escorted from the Great Hall. Now, due to this political uncertainty, it's fair to say that foreign investors got scared, as their main concern being that Chinese economic policy could take a sharp turn back towards Maoism and will be less tolerant of the capitalistic advances originally implemented by Deng Xiaoping. Now, during his address at the National Congress, Xi Jinping reaffirmed his desire for common prosperity, promising to improve income distribution and regulate the means of accumulating wealth. He provided no update as to the possible easing of China's zero-COVID policy and also reaffirmed the desire to bring Taiwan back under Chinese control and refused to rule out the use of force if necessary. Furthermore, he's also set to serve an unprecedented third term in office after he abolished term limits in 2018. He's now considered the most powerful man to ever lead China. Now that's a lot to take in, but do these events make China as uninvestable as the media makes out? Well, you certainly shouldn't believe the news at once. After all, the media's fundamental goal is to generate clicks and entice interest through any controversial and false statements. Now, Chinese businesses are strong and undervalued, but they just operate in a vastly different political and economic environment. Also, remember that in the world of financial markets, most of the players are trapped in short-term activity and literally can't take advantage of short-term carnage for long profits. So remember, Wall Street has to impress their clients every 3 months, or the clients will just jump ship. So the analysts that are brought onto these TV programs are only ever looking at like the next 3 to 6 months. You know, if they make an investment that they're certain will do well in the next 10 years, but first it's got to lose 50% in 6 months, but it does good in the long run, their clients will still be unhappy. The media noted 2 years ago that oil was uninvestable. Even in 2011, European stocks were uninvestable, and in 2009, all bank stocks were uninvestable as well. What's interesting in each of these examples is that in the short term, these particular stocks or commodities were very volatile. But over time, all of them proved to be wonderful short-term opportunities to make long-term profits. And it's also worth remembering how the media present information to support their narrative. For example, a lot of media attention was drawn to how the Politburo Standing Committee is now full of Xi loyalists, so that Xi Jinping can run the perfect communist regime he's always dreamed of. And you know, business in China is now dead, which is bad indeed. But it's worth noting that China's new premier, Li Qiang, literally the second in command, doesn't fit that picture at all. The Asia Times noted that Li is a tech-savvy supporter of high-tech entrepreneurship who believes that China's future lies in the digital economy. Li studied business administration and holds an MBA degree from Hong Kong Polytechnic University, a top-tier Asian business and technology school. He supported technological entrepreneurship at the leading edge of China's development. Li was one of Jack Ma's most visible supporters in the China Communist Party leadership. He brought Elon Musk's Tesla to Shanghai. His appointment affirms the leadership support for private-led, high-tech industry. Now, all this certainly paints a different picture to what was being said in the Western media, right? Now, that's a good example of why we shouldn't always believe media. Now, on the other hand, investing in Chinese businesses certainly isn't without risk, as there's still some risk of potential delistings of Chinese businesses from American markets. There's a risk that the Chinese government will regulate their businesses and maybe meddle with exactly how profitable these businesses can be. There's even geopolitical risks surrounding Russia and Ukraine, and of course Taiwan. So if you're interested in investing in some of those businesses, you have to keep some of the potential risks in mind. You've got to just allocate a portion of your portfolio appropriately for your risk tolerance based on the unknowable risks that are out there. And once you're over that hurdle, you just focus on the businesses like any other stock. Now, right now, a lot of these Chinese stocks are so cheap, but don't just dump 100% of your portfolio into these stocks. Now, let's just go over what some of the big investors are talking about in China and the actual businesses rather than just the politics. Now, Howard Marks' views about investing in China are that Europe and Japan are economic senior citizens with not much vitality. The US is a mature economic adult whose best decades are behind it, while China's an economic adolescent whose best decades are ahead. Marks believes that China wants to be a member of the world's economy, and Shanghai wants to be one of the world's centers of finance investing. Now, this perspective about China wanting to be part of the capitalistic world has a lot of evidence in that direction, despite what the media are trying to push. Communism with Chinese characteristics and all that. So Marx could be right. Now, the next view of Monish Pabrai is that Alibaba is a crown jewel for China, which has the possibility of global footprints. So the government isn't going to kill their golden goose. So it's very much clear that these Chinese companies are very high-quality businesses. That's certainly different to what you hear in the media and how the CCP would be foolish to crack down. So there are risks, no doubt, but if you're comfortable with taking on some risk, then the great thing is you can just size your portions according to your risk tolerance. Lastly, it's also interesting to note Charlie Munger's point of views about investing in Chinese markets. He said in an interview that they invested some money in China because they could get more value in terms of the strength of the enterprise and the price of the security than they could get in the United States. Others, including Sequoia, the leading venture capital firm in the United States, have made the same decision about investing in China. They invested for a simple reason. They got more strength per dollar when they invested in China and Chinese companies. Now Charlie's totally focusing on the underlying businesses and actually gives very little attention to the macro and to the political factors of investing in China. Imagine a media outlet writing a story about China along the lines of Charlie's viewpoints. There's just no way. But guys, with that said, that was all about whether China's currently uninvestable and they're the super investors. Now, once again, just don't swing this video to one way or another on potentially buying any of these Chinese stocks. You must do your own due diligence. We hope you take away some real good thoughts from this video. And just remember that oftentimes, what you see in the media is really just a lot of noise. And you really shouldn't believe everything that you read. Always do your own research, specifically before taking financial decisions and making any kind of investment. Because everywhere in the world, the stock market's unpredictable and volatile. So you also need to check your risk tolerance before making any kind of commitments, especially if you're in it for the long term. With that said, thank you very much for tuning in, and you make sure to leave a like if you did enjoy it, and subscribe if you're new to the channel. It helps us grow and make more informative videos for you. We'll see you guys soon.